So I've touched on a few benefits as we've kind of gone through here, but just to briefly sort of recap on some of these things. Succession, obviously for an SME business owner, typically this may be something that they've lived and breathed for a very long period of time. The culture of the business can be very important to them. They want to feel in control of the process and be confident that what they have built up over many years is going to be continued in the way that they have created it. And I think an EOT transaction probably does that and helps to secure that future more so than any other form of transaction. We've touched on the fact that due diligence is typically much more limited in these types of transactions, but if we do go and look to raise some external finance, then just be aware that it's quite possible that that external finance provider may require some due diligence of their own, albeit there won't be the usual sort of buyer due diligence that we would typically see on other forms of transaction. Again, on something like a trade sale, one of the concerns that sellers can have is that the buyer may seek to pull out of the transaction at some stage, or maybe they weren't even a genuine buyer at the outset. They were just simply there trying to find out more information about the company. Certainly a benefit here is that there doesn't need to be any of that sort of external communication until the transaction is effectively completed. It can be done very much sort of under the radar, other than that discussion with the employees. And there can be benefits there in terms of not having to release potentially sensitive commercial information to competitors. Now, I've sort of saved arguably for the sellers the best to last, though. Many will be aware that a significant benefit under the EOT arrangements is that the selling shareholders, provided certain conditions are met, can sell their share in the business and not have to pay any capital gains tax. So a really significant incentive, particularly on the back of things like entrepreneurs relief or business asset disposal relief, as it's now called, being reduced in recent years. Concerns around capital gains tax increasing. I think this is probably one thing that is helping to increase the popularity and certainly increase the awareness and people's interest in these types of transactions. But probably one of the reasons why I have left that until last is that we would never want that to be the key sort of driver for one of these transactions. Yes, it's very beneficial and interesting to people, but it shouldn't be the sole reason why a seller is looking to go through an employee ownership transaction. In terms of the employees, obviously we expect that they would have a much clearer voice within the company now, opportunity to have more of a say-so in terms of how the business is run, going back to this point around employee sort of governance and how the business is to be run on an ongoing basis. There are different structures that can be put in place. Some businesses choose to have some things called employee councils that sit alongside the board of directors that can ensure that there is a clear channel for communication from the wider employee base and to make sure that their voice is being heard. As we say, ultimately, an EOT is intended to be for the benefit of the employees overall. So that's certainly a key benefit. Equally, there are a few sort of tax benefits for employees. Again, many of you may have heard that bonuses, annual bonuses of up to £3,600 can be paid to employees each year. Do be aware that there's still national insurance to pay on those, so it's income tax free, but that doesn't exempt the national insurance. And one question that sometimes comes up is that do they have to be equal between all employees? They don't, but an employee ownership transaction is really about benefiting the employees as a whole. So there are some very sort of limited specific ways in which those bonuses can be directed and so that it's not on an equal basis. I've just summarized here saying that 3 ways really is remuneration, length of service, or based on the number of hours worked. Finally, then, for the company, in terms of the benefits, as we've said, really, this is very much a cultural aspect. If a business has a good, strong culture, one of the concerns around a change of ownership can often be any alterations to that culture. in theory, under an employee ownership transaction, we wouldn't expect there to be any significant alterations to the culture. It will very much continue in the good way that the business is already used to. But hopefully, with just the benefits that the employees now have this renewed sense of energy, enthusiasm, maybe a slightly different sort of mindset, going back to Oliver's sort of metaphor there in terms of the difference between someone owning a house, and renting a house, and perhaps just caring a little bit more for the business and the environment that they work in. So very quickly sort of gone over the process and some of the benefits there. I'm pleased to see there's quite a few questions coming through. So we'll pick up on those shortly. Just one thing before we do that, and just to make sure everyone's still kind of awake and are paying attention. So this is the catchphrase round. We've got 2 words here on the pictures. Hopefully it's not too early in the morning for people to pick this one up, but this is the shameless plug. Yes, so shameless plug here for Horsens. Obviously, we've gone all through this on the basis that we do know this market very well. We've transitioned a number of businesses over recent years. We genuinely feel like we're the sort of experts in this marketplace. And as I say, well, I had to do something, didn't I? So hopefully you'll all forgive me for dropping that bit in there. And on that note, Carl, I'll pass over to you.